Stock market today. Dow, S&P 500, and Nasdaq brace for a downturn amid tariff uncertainty and disappointing earnings. U.S. stock futures took a hit on Thursday as disappointing earnings reports from major companies like Marvel and Macy's, coupled with ongoing concerns over President Donald Trump's unpredictable tariff policies, sent shockwaves through the market. Investors are increasingly anxious about the direction of the U.S. economy. Futures linked to the Dow Jones Industrial Average slid 0.9%, while S&P 500 futures declined by 1.1%. Meanwhile, Nasdaq 100 contracts dropped 1.4% following Wednesday's strong gains. Tech stocks take a hit amid AI concerns. Technology stocks led the downturn, with Marvel's underwhelming quarterly sales forecast unsettling investors who anticipated a stronger return on AI investments. The company's shares plunged over 16% in pre-market trading, dragging down other semiconductor giants, including Nvidia, Broadcom, and AMD. Adding to the uncertainty, fears surrounding the AI sector escalated after the emergence of DeepSeek, along with a surge of affordable Chinese AI models, which have fueled the rally of Alibaba and other Chinese tech firms. Additionally, Trump's recent threat to cut funding from the CHIPS Act has amplified concerns among tech investors. Trade war anxiety continues to shake markets. Investors remain on edge as Trump's tariff negotiations take center stage. While his recent one-month pause on tariffs for Mexican and Canadian automakers provided brief relief, the broader 25% tariff policy is still in effect. Reports indicate that the White House is evaluating potential exemptions for agricultural products, but no final decisions have been made. Meanwhile, Macy's shares slumped after the retailer issued a weaker-than-expected outlook, attributing some of its struggles to the impact of tariffs. In response, Walmart has reportedly pressured Chinese suppliers to lower their prices in an attempt to counterbalance the tariffs' effects. Upcoming jobs report could influence interest rate cuts. A weekly report on jobless claims will set the stage for Friday's monthly jobs report, a key indicator for potential interest rate adjustments by the Federal Reserve. Recent weaker economic data has reignited fears that U.S. economic growth may be stalling, increasing speculation about a potential stagflation scenario. Macy's stock drops 3% in pre-market trading amid a weak forecast. Macy's shares fell 3% in early trading after the company posted disappointing fourth-quarter same-store sales and issued cautious guidance for the year. Despite reporting earnings per share of $1.80, beating analyst expectations of $1.54, same-store sales grew by only 0.2%, falling short of Wall Street's 1.23% estimate. Looking ahead, Macy's expects 2025 revenue between $21 billion and $21.4 billion, which is lower than last year's $22.29 billion and below analysts' forecast of $21.66 billion. The broader retail sector is also feeling the heat, with Best Buy, Target, and Abercrombie & Fitch seeing their stocks plummet this week after issuing soft earnings forecasts. Global bond sell-off. German yields surged to highest levels since 1990. Germany's bond market is experiencing its worst decline in decades, fueled by the government's historic decision to increase defense spending amid reduced U.S. military support in Europe. The sell-off is spreading globally, shaking debt markets worldwide. On Thursday, yields on 10-year German Bundes climbed by 14 basis points, reaching 2.93%, the highest level since October 2023. This follows Wednesday's historic 30 basis point surge, marking the largest single-day jump since the fall of the Berlin Wall. The turmoil has rippled through global bond markets, with Japanese, Australian, and New Zealand bond yields also reaching multi-year highs. Italy's bond yields soared past 4% for the first time since July, while UK gilts extended losses for a second consecutive day. According to Martin van Vliet, a global macro fixed-income strategist at Rebecca, the volatility in bond yields highlights the interconnected nature of global financial markets. As investors constantly assess cross-market yield spreads, Chinese AI surge. Alibaba shares rally on new AI innovations. Alibaba stock surged nearly 3% in pre-market trading after the company unveiled its latest open-source AI model, fueling optimism in the Chinese tech sector. The move comes amid growing competition in the AI space. As DeepSeek continues to disrupt the market with its low-cost AI solutions, creating pressure on Western AI firms. The introduction of several new AI tools from China has led to a frenzied rally in Chinese stocks, with Alibaba's stock gaining 8.4% in Hong Kong. The latest advancements in AI, including Tencent's Hunyuan and Kuaishou's AI video model, have reignited investor confidence, pushing Chinese tech stocks to their highest levels since 2021. Trending tickers in after-hours trading. Several major stocks made significant moves in after-hours trading on Wednesday. Marvel shares plunged 15% despite exceeding earnings and revenue expectations for 4 consecutive quarters. The sell-off signals investors' high expectations for AI growth. The cybersecurity firm jumped 5% in extended trading after posting revenue and earnings beats exceeding 10%. MonGod, despite delivering strong earnings, the company failed to meet Wall Street's expectations, sending its stock tumbling 16%. Market outlook. Stagflation fears loom over the U.S. economy. A wave of weak economic data is amplifying fears that the U.S. economy may be heading towards stagflation, a scenario marked by sluggish growth and rising prices. Wall Street analysts are closely watching the Federal Reserve's next move, as tariffs continue to drive up costs, while job market uncertainty increases. Many investors are now questioning whether upcoming interest rate cuts will be aimed at stimulating growth or simply preventing a further economic slowdown. With Trump's unpredictable trade policies, uncertainty is at an all-time high. Investors are bracing for potential market volatility, as tariff policies remain unclear and global supply chain disruptions persist. Subscribe for more market updates. The stock market is changing rapidly, and staying ahead is crucial. Subscribe now to Unfiltered Truth Report for real-time financial insights, expert market analysis, and the latest economic news. Turn on notifications to never miss an update. Let's navigate this financial landscape together.